Hello and welcome back to our channel Polo Vega. We're going to start our second segment with basics of trading and investment. But before we go on to talk about the basics, let's first look at the disclaimer/disclosure clause. Disclaimer/disclosure. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 16th of a series of interactive videos aimed at educating our viewers about basics of trading and investment. Taking a position in the market. The first basic step of taking a position in the market or getting into a trade is to decide a price at which you would prefer to enter the market. This could relate to taking a long position if you wish to buy an asset or a short position if you wish to sell an asset. Managing a position. The second step to an investment or trade undertaking is to manage your position while the market moves in your favor or against you. One needs to be fully aware of their exit strategy while the market moves in accordance with continuously evolving international/domestic economic and geopolitical parameters. Exiting a position. There are two ways in which you can exit your existing position in the market. If the trade moves in your favor, you can exit the trade when it hits your target. Secondly, you can exit when your trade moves against you and triggers your stop loss. Risk appetite. Our appetite for risk decides our entry as well as exit from a position. The more risk averse we are, the more quickly we tend to exit from our existing positions, or the greater is our chance of not entering a trade at all. The more aggressive that we are, the longer we tend to stay in a trade and the more easily we tend to enter a trade. However, our decision-making process should not be affected by our affinity for risk or our aggression. Trading with a clear mind. As indicated on the previous slide, the decision-making process to enter or exit a trade should not be marred with a behavioral bias or anyone's risk profile. The decision to enter or exit should be based on your analysis and strategies that are used to formulate your business plan. Emotions and behavioral bias blur your vision, so one needs to steer clear of them when placing a trade. Preserving capital. Your trade plan must include mandatory use of stop loss so that you do not lose more than a calculated value if the trade goes against you. Your trade plan must include a total value of daily loss at which you should stop trading. Your trade plan must have an option to reconsider your strategies or take a break from trading, to backtest your trade ideas, and rules if you incur a fixed number of losses in a row. Avoid overtrading. Every trade is not the perfect trade that follows a typical textbook plan. Win or lose, one should not try to place too many trades in order to avoid getting caught up between greed and revenge trading. There are only few opportunities that actually exist for a successful trade, and one should be able to correctly identify them and place the trades that deem fit. Discipline and the rule book. Discipline is the foundation stone of any trade plan. Every trade plan must have rules that suit the trader's ideas, strategies, and techniques. Every rule included in a trader's trade plan must be followed by him, otherwise the rule should not be included in the plan. We hope you enjoyed our short video presentation on the basics of trade and investment, and agree with the doctrine of selecting quality trades that fit your trade plan and do not try to buy every rally or short every drop. In our next video, we should talk about setting up a trade, placing different orders, and preventing loss of capital. If you liked our video, please give us a thumbs up and press the button underneath to subscribe to our channel Polo Vega and watch all our videos. You may also visit us at our website www.polovega.com or get in touch with us through our Twitter handle @PoloVega. Please keep saving, keep investing, and keep getting wealthier until we meet next. We thank you and request you to please like, share, and subscribe to our channel Polo Vega.